Hey everyone, welcome back to another portfolio review. As I promised on Monday, I would hope to get this video out for Wednesday because I did get the updates from M1 Finance to be able to update my portfolio on Google Sheets, so we can kind of go through that as well. And then I also got the one from Robinhood. Some things aren't quite adding up, so hopefully I might see that next month. Because it said it went from the 30th. Basically, long story short, if I go into, oops, not documents, well, that's where I go to see what I had. But if I go to history and then I look at just the dividends, me adding up all the dividends from April, I get one number, but the document says another. So not quite sure what that's all about. Hopefully I see that on next month, but I took its word for it and I just put in under dividends what it said. So this is the most up-to-date information. Might need to change as well, but we'll get to that in a second here. I did put in some more money here. What's going on? There we are. Yeah, I got paid at work and had some extra money to spend, so I put $400 in each Robinhood and M1. Didn't buy any new positions, just kind of again trying to dollar cost average some of the positions I already have. I think I added a couple more Ford, added another Bank of America. Wells Fargo, I always added some more. And I can't remember the other one. I suppose I could always look at the history and see. That would give me the for sure answer, but that'd be too easy. So Ford, Bank of America, Wells Fargo. Bought another 3 shares of Coke, British Petroleum, and that was it. So maybe I was lying on some of the other ones. But since the last time, American Airlines, Wells Fargo, New Residential, Keurig, Carnival, Altria. Yeah. So, I mean, since the last time, I don't know when the last time I recorded was, but I've been trying to average out as much as I can. Trying to scroll down here. Still interested in trying to add some of these other dividend stocks. Disney might not be a bad one to add just because of the position they're at. I know I have it in M1 Finance, which is kind of why I'm like holding off on doing so. But as it sits right now, they went down quite a bit farther today because they've had such a bad first quarter. Like even just like earlier in the week, 112. If we look at a month ago, well, they're doing better. But in the last 3 months, you can see where they've really gotten hit. But just some companies I'm thinking about. But again, I buy it in M1, so I don't really see it necessary to double dip, even though I've done it with some of them. But yeah, I'm just always kind of looking through and seeing like Citi might not be a bad one. American Express, Boeing, I'll probably, I don't know, still thinking about it because a lot of these are cutting their dividends due to current circumstances as we've been talking about for a while here. But yeah, a lot of these stocks I'm interested in. It's just finding the right time. Southwest Airlines went down quite a bit in the last week. They were trading for about 30 to 40, and now they've gone down quite a bit. So this might be something that I look to pick up here soon. So keep an eye out for that for sure. Yeah, because they were at like $30 a week ago, and a month ago when I added positions like Delta and whatnot, they were trading for 40, so it just didn't seem like the right time. But definitely look into them as well. So yeah, so that's all I've really done on Robinhood. Not a whole lot's happened. It's a bit of a slower month. 1, because April's a slower month, and 2, because now we're starting to see the effects of coronavirus and people not getting their dividends or not paying out their dividends. But yeah, a lot of good news articles kind of through here and stuff. But one thing I did hear, which kind of has to do with stocks and investing, is that Wendy's, like the restaurant, is no longer serving beef because they're out of burgers because they don't have any beef. The supply is lowered. So now I see this, and that's kind of what made me think of it, is that Beyond Meat, which I've actually tried, and it's really good. They do a really good job at like plant-based burgers, and they're trying to kind of take the market. So that could be something interesting to possibly look into. but they're trading for $100 a share and they don't pay dividends. So that's just not my forte, is doing growth stocks, because I just don't see the value, because you kind of have to like sell it if you want to make money on it. But yeah, at one point they were trading for $230 some, and yeah, I just don't see the long term in them. Something to think about. Obviously, I may change my strategy moving forward, but yeah. So now 35 over here. Oops, I never logged in. Yikes. Usually I'm pretty good about getting that set up, so we'll just let that sit for a second. There we are. So we got 34 over there and 34 over here. So now we're brushing 7,000, I believe, for total portfolio. Yeah, 68. So we're getting close. It just depends, like how much money I've put in. It's a little different than, because I think between both of them I've invested 37. Yeah, 37,000, and the other one says 37. Yeah, so that's a little different. So we are kind of at that point where I've put in a lot more. Let's do that number. So yeah, I've put in 7,400. It's just my current portfolio value isn't quite that, but as soon as everything kind of corrects itself from this mess, I have a lot of red right here. When we get to the stock portfolio, I can kind of show you where Robinhood is mostly down in, and real estate's another one that has been hit pretty hard, but that is all right with me because I know it's going to turn around as soon as everything gets fixed. Actually, really quick, one with real estate is NRZ. Actually did pretty well today, up from a while, because they actually had their earnings call, and they were predicting to be negative 17 cents, and they actually were positive 50 cents. So a lot of people were kind of going into that. So good for them that they were kind of turning this around, because that's another one that I have a decent amount of money in. And then I also have them in this tab as well. Yeah, so they're still down quite a bit, but we're getting everything sorted out here, so no worries on that. But yeah, as we say right now, we're no longer like down, but we're still slowly going up. But if we, yeah, so you can see how much money that I've invested. $58, I believe, is from dividends. So that's pretty cool. I'll have to double check, because let's see if that actually is what it comes to. Equals sum. Huh. I don't know where I'm getting the extra from. Okay. Well, anyway, kind of jumping ahead here, but yeah. So as I said, this is how much we've put in, and this is what our current value is. So we're down 325, but as it says, there's some that are making money, like a lot of the healthcare ones. The bonds are going up. Apple's making good money, but if we look at kind of the opposite, NRZ is the one that's the real big hitter right now. No money's been invested in it, so I'm kind of sad that the average cost hasn't gone down, where I've been specifically doing that on Robinhood. So yeah, banks, real estate has been hit quite a bit. If we look at the activity, if I just do it by dividends, you can see that we've gotten some pretty good dividends. AT&T paid it $2. Verizon paid 60 cents, close to. Yeah, still getting dividends coming in, so that's really awesome, and we'll kind of look at that some more when we head over to the update on that. But yeah, again, not a lot of changes happened since then. I wish I could have more, but it's just because I'm not working right now, I'm not able to put more consistently in there, or as much as I would like to. But making progress. Definitely, it's come a long way since the start. Just the $200 has now grown to quite a bit, and I'm probably gonna look back a year from now and think, wow, that's it's come a long way as well. I mean, if we look at just our day return, we're up $26 the last week. We're down, but it's up and down. In the last month, we've gone up in money. The last quarter has been rough. The last year, pretty much all the same. But anyway, moving along to the stock portfolio, slide back over here. Again, a lot of our money that we're down in is all Wells Fargo, and there's not really much more dollar cost averaging I can really do, because for every 3 or 4 I do, it only drops like $1. So I'd really have to invest quite a bit for it to drop and be a lot better average. But once we start seeing the market go up, this is going to be a lot of money. So I just kind of bring my calculator over here so you can actually see kind of what I'm typing and talking about. So its high point was $50. We'll say it's $50 is where it's potentially trading at. So that's $15. And then times 19, that's $285 we could be up once it's close to its max peak. That's quite a bit. That offsets this quite a bit. And there's other companies right now. Kraft has become quite positive, which is really good to see. These kind of fluctuate quite a bit, and a lot of the other ones as well. But it's all a work in progress, trying to get stuff balanced out. I mean, this is kind of what when I do decide to buy stocks in the morning, this is kind of what I'm looking at, is seeing what's really negative and see what I can try to balance out. And I try to do that. Less so looking at like the sector percentage right now, because I do kind of have a good balance. And I do kind of take into consideration when I do add more positions. But right now, I've got a lot of consumer defensive, which helps in this type of scenario. Financial is kind of weighted quite heavily because of Wells Fargo, and I have a lot of the other banks as well. But yeah, and then if we take a look at the dividends, I've kind of showed you this as well. It needs to be tweaked a little bit, but for the most part, we've made $23 this year so far, or projected, because there's 67 cents over here. But yeah, I mean, definitely the first year was just getting the ball rolling, and this is where it's really starting to take off. So I can't wait to kind of compare the next years to kind of where I started. This is the updated projection for my dividends. I tried looking to see if any of them changed. None of them did change. And if they did, I did update it. But on the sheet that they printed out, my projection's like 202 on there, and I have 208. So that's pretty good that it's really close. And something that I kind of wanted to talk about is, I think I've shown this number before. So $208 times 40 is going to be an extra $8,000 over the course of my life. M1 Finance still does like a projection for that as well, and that's about $120. So if we look 210 plus 110 about, and then we times that by 40 over the course of my life, that's an extra $12,000. And that's if I decided to not put any more money into it and all these dividends stayed the same. Is that realistic that the dividends stay the same? No. Is it possible that I won't put any more money in? That's also not possible. Not likely as well. So really cool to see. Wells Fargo is my big heavy hitter at $40 over the course of a year, so that's going to be really helpful. Carnival Cruise Lines also pays quite a bit. Energy Transfer. So a lot of big companies that are going to help me to invest more money going forward. So again, most up to date. A month ago, we were looking at just under $200, so we've now crested the $200, which is awesome. Really excited to see that. So things are growing, and that's what I like to see. I just wanted to say one more thing. So I can't wait till we get to October, November, December and really see kind of the difference between the two. And then I can start talking about this is the percentage growth. Obviously, October is going to be kind of a joke because I didn't really get started right away. I started in September and dividends were starting to roll in. Only General Electric did. But December, I think, will be a pretty good comparison because by this point, dividends were being paid, and December's a big heavy hitter. So excited to get to that point. But that was the last thing I wanted to talk about. So M1, we updated it. I ended April with $3,095.90. I don't know, month over month growth rate. So I think that's the growth from this month to this month, I believe is what it is. I have no idea what all that is, but I believe that's what it is. And And then it's also talking about like monthly dividend amount. So we made a little bit less than last month at only $5, but that's still kind of just over our projection because I don't think. Yeah, so the average income was $493, so we were above that, which is all that matters, that I'm above projections, and I want to continue to do so. And you can kind of see the graph. Again, it went down, but again, it's trending the way I want it to. I want everything to slowly move forward. So next month we should be at about 556, which I think we already had a good start. If I go back into activity, yeah, if we just look at the dividends, we're already $2 up because of AT&T, and I don't know how many shares I have of AT&T. I have 6, so that's pretty helpful to start with. So we're already getting off to a good start with that. So hopefully we can kind of see it move forward. The average income, which is kind of something else that I like to see, is right now based on some sort of formula. Oh wait, it's this one times 12. So right now it's projecting us at $60 a year, but as we found out, it's a little different because I'm adding money. But as we're sitting right now, we're projected for $60 this year, which I'm okay with. You know, it's $60 for basically free for just buying companies, holding them, and letting them pay me, which is why this strategy speaks to me so well. Again, everyone has a different way that they want to invest. This is the most comfortable for me, and I'm excited to see by next year to see how close that 135 mark is. We'll essentially be doubling our income, or close to, actually more than doubling, it looks like, by next year. So that will be really cool to see, and hopefully it's more than that. Hopefully it's way more than that, that we were able to invest quite a bit more. But right now I'm just trying to take advantage of the market. I do need to get back on track on paying off my debt, and we'll kind of cover that in a second here. So after kind of the February to March, kind of what seemed like I didn't invest any money, but it was more so just the market was going down, and I was kind of, it was one of those things where my boat was sinking and I was using a bucket to get out the water, and that's kind of what I was doing. Is as it was going down, I was pulling out the water, I guess is the best analogy I could come up with. I was keeping the boat from sinking, let's say. So, and then as everything kind of started to go back up and things started to even out, I suppose, now we're able to see a jump up. So that's really cool to see. So I do really like, you know, adding stuff into the sheet because it just, everything automatically updates, and it's really cool. Obviously this is my handy dandy work, and this was obviously a spreadsheet made for the Joseph Carlson Show. I am using it for my own portfolio because it's the same stocks, it's the same information, so it's very helpful to have this as well. This kind of helps me track my personal stocks. This is just kind of a portfolio in general, so whatever works, you know. So anyway, back to kind of my net worth tracker here. So as I was saying, I want to get back on track getting this paid off. I could definitely probably get my watch paid off probably by the end of the month. I was planning on doing it a lot sooner, but you know, with the market being where it's at, I had to take the opportunity where I could. So I'll probably try working on that. Right now, the whole selling the car thing is kind of put on hold because I don't really anticipate anyone to have very much money with what's going on. But I mean, we're now under 2,000 and it feels good, you know. So we just I got to keep chugging along, and then hopefully we can start, you know, dropping the car a little bit faster. Yeah, so working on that. I haven't really updated these values because I don't want them to go down. I just want them to stay the same. But maybe at the end of this month I'll actually update them and be accurate, because I'm pretty sure these aren't accurate and whatnot, but it goes up and down. These are the most updated based on the monthly reports that it gave me for this month. This is what they're currently at, or what they were currently sitting at. Retirement accounts been very stagnant because I'm no longer at K, no longer contributing money, so it's just kind of stagnated as well. Oh, I need to update that. This isn't up to date totally because I haven't changed over these numbers yet, but it is what it is. So I'll probably get that updated after this video, after I'm done recording it. Savings account, I am contributing money every month. That's in my budget. Also, part of it is the money that gets pulled out for these loans. So I'm also putting money aside for insurance because I just pay it in full every 6 months. Where is my mouse? Oh, I was like looking over at my recording and I was like, why is my mouse over there? But anyway, sidetracked. Since I paid in full, I don't want to be surprised, I guess, in a sense of paying $500 out of pocket. So I've been putting $85 away. So then I have that 510 ready to go for when I do pay for it. So that's kind of why my savings is a little bit higher than it should be, because I don't need to put any money into savings because I'm at that $1,000 emergency fund, but I can't really complain about having, more savings than that because emergencies happen, and the last thing I want to do is pull from these to pay for it when I can pull from here. One, because savings is a faster access. But again, if we're talking about the 7 steps to paying off debt, like Dave Ramsey suggests, is you get the $1,000 savings, pay off debt aggressively, and then it's like investing later. But at the end of the day, personal finances is personal. You get to choose what you want. Excuse me, hiccuping right now. You get to choose how you want to spend your money and where you want to put it. If you think that you need $2,000 in an emergency fund and then pay off your debt, by all means. It's just what he recommends is $1,000, which I can definitely totally see. If we look, I was chilling at like $800, $1,000, and I was able to pay off $3,000. Again, a lot of that was because of my tax refund and whatnot, but it is what it is. So again, we're making progress here. Once I get my check later this month, actually, let me see. So we got paid the 30th first, so we'll get paid the 14th. So I get paid 2 more times this month. So I'm sure we'll kind of see this number grow quite a bit more. It might be one of those things where maybe I pay off my watch instead. I don't know. I'll decide that when time comes. See where the market's at. I have been noticing the market's been trending up, so it's been making me less wanting to invest currently. To a point, because obviously I've bought stuff that were at like an expensive price, and they've gone down since. But at the same time, I didn't know if things were going to continue to go up or what was going to happen. This black swan event, and no one saw what was going to happen. So we'll see what I decide to do. We'll see where the market goes. People are talking about a potential another crash and whatnot. I don't know if that's too likely. My opinion is I think things are going to start to get back up. As far as my state's concerned, we're starting to reopen slowly. So we've been locked down for a month and a half or so, I'd say, maybe a month. But we're slowly starting to open things up. I'm able to go into work like 3 times a week now, which is fantastic. It gets me out of the house, which is great. But yeah, we're getting close to the $25,000 prize, $25,000 net worth. So that's really exciting. We're kind of just right there. We'll be there shortly, but yeah, I've just loved seeing those big spikes where, I did really well. Does this have, let me see if this has, I don't think it had the other month. There we are. So I love seeing these big spikes because that means that I was able to increase it quite a bit. Just a couple months ago, we were just over 20,000. Now we're sitting at 24. So a lot of it helps because of the tax refund and the Trump bucks as we got. But yeah, things are going good. Things are going up. I love where things are going. I'm just excited for what's coming forward. I do appreciate anyone that stops by and watches these videos. If you like it, leave a like. It helps grow my channel, helps get these videos out to other people. Leave a comment on things that you think I should do, your opinions. I'd love to read them all. I do respond to everyone's comments, assuming they're real people. I have been getting those spam bot comments, which I think are pretty funny, but yeah, I appreciate it. Thank you guys for stopping by. Have a good day and take care of yourselves.